I think everybody should consider other investment ideas and not just tech. We talk a lot about tech on this show, and that's important because tech makes up the largest component of the S&P 500. Almost half the S&P 500 is technology. And you could break down technology in different segments, different parts, software, hardware, social media, artificial intelligence. There are many ways to talk about technology, but overall, I think you need some technology in a portfolio, especially if you're looking for growth. I think you need some of the Mag 7 names, as I've said many times, if you're looking for growth in a portfolio. But I also believe that there are a lot of other great names that are out there that you can invest in that have given really, really good returns over the past, let's call it year to date. And I have some of these names to share with you today. Some of the names that you would probably be surprised to find out that they're actually outperforming the Mag 7 as an index. And I brought you some of these names today. First one I wanted to talk about was American Express. American Express, there's the chart, doing phenomenally well. The day we took the chart, not so well, I guess, yesterday. However, overall, American Express has done phenomenally well, over 30% growth this year, compared to the Mag 7, which is just over 30% as well. So it's matched the Magnificent Seven, the seven biggest tech names that we talk about often. American Express up 33% to be exact, and the Magnificent Seven up 33% as well. And again, understanding why American Express has done so well, keep in mind, even though the economy is slowing, American Express is not for everybody. You tend to see American Express cards being held by the wealthier segment of the population. The higher income earners tend to have American Express cards. And so though that segment of the population tends to not be affected as much when the economy slows down. So it's no wonder that people continue to spend on their Amex cards. We see a lot of American Express putting trips and hotels and travel, cruises and things like that. American Express says that continues to be strong. A lot of consumers putting a lot of those charges on Amex cards. So it makes sense that even if the economy slows down somewhat, that Amex should be somewhat immune because their clientele tends to be in the upper segment in terms of wealth, in terms of income earners of the population. Another name that has done extremely well, and again, a name that you wouldn't probably assume or guess, is a name called 3M. And 3M is known for its adhesive tape. It's known for its sticky notes that it produces. A name that has been trading, kind of a bit of a boring company, I might say, but they've spun off some businesses. They've really done well in the last little while, up 44% year to date. Unbelievable run for 3M. I think they have new management as well, which has helped. And so overall, again, another name that has done better than the Mag 7, and it is done better than many tech stocks, many big cap tech stocks. So again, something outside the tech sector that has done well and looks to continue to do well, as you can see the chart on the right-hand side. Last but not least, a name that we all have grown to know and love, and I bet most of us have shopped there at one point in time, whether you're a high income earner or whether low income earner or somewhere in the middle class, as we call it, is Walmart. Walmart too is up well over 40% year to date, and it's a name that continues to do well. And I think it continues to do well when you I guess if you analyze the company, is because they have something for all segments of the population. If you're looking for cheaper items, they have it. If you're looking for other items that may not be cheaper, they have that as well. But I think probably the number one reason why Walmart has continued to do well during the inflationary times, during now what we're seeing a little bit of a slowdown in the economy in Canada and the US, is because they have a very good, large, thriving grocery division. And their groceries just have done extremely well, that part of their business. And that's what separates them from a Target or other retailers. Costco is another name that comes to mind. Their grocery division has also helped them do extremely well. So Walmart, a name that I think has done extremely well, a name that I think a lot of individual investors have looked at And for those that got into the name, they've been handsomely rewarded. And here we have our last chart of this segment, which is the chart on the Magnificent Seven. You can see that Magnificent Seven has pulled back a little bit recently, still up quite a bit on the year, but has pulled back recently. So overall, I guess there are other sectors, there are other investment ideas other than tech. It's not just tech. It's not about what can you buy NVIDIA at, what can you buy Microsoft at, or Amazon, or any other names that are in that considered in the tech space. It's about building out a diversified portfolio made up of fantastic companies, leaders in their industry, leaders in their sector, and buying them at a good price. And as always, if they pay a dividend, that's even a better recipe for success. But it's about building diversified portfolios. And as we've just seen, a lot of perhaps boring names that you wouldn't have considered are having fantastic years. And these are names that I think every individual investor should consider for not only growth, but also growth and income.